Nice to be back in Vancouver. It's been roughly 5 years for me. I love this city, but 5 years of a painful market if you've been invested in precious metals, so it's nice to have a little sign of life here over the last couple of years. Today I'm going to talk about gold, silver, and Bitcoin, 3 assets that I hold in my personal portfolio and recommend in the newsletter. Specifically, the perfect trifecta, why I think you want to hold all 3 of these assets. And at the end, I'll give you my top gold stock pick for the next year. With Bitcoin, lots of fear and confusion and misunderstanding, I think, about what it really is and what it really can be. So I'll talk about that, and hopefully, if I finish up in time, take some questions at the end. So, just a note on human psychology, everyone likes to pick a fight. People are afraid of change. And we see this happening in the gold versus Bitcoin. I see 3 or 4 articles every week, new articles, pitting the two against each other, as if gold investors shouldn't like Bitcoin and vice versa. They almost feel a threat because investment dollars have shifted to some extent from precious metals into cryptocurrencies. But my point of view is that they're complementary assets, right? From a philosophical point of view, they share a lot of the same traits and characteristics, but they also have certain strengths that gold has that Bitcoin doesn't, and vice versa, so they work very well together in your portfolio. It needn't be one or the other type of battle, one versus the other, that you always hear. And so consider owning both. Why own gold? I'm probably preaching to the choir a bit here, but if your convictions have been rattled over the last 5 or 6 years of this correction and consolidation, probably worth just going through really quickly. It's been money for thousands of years, since 700 BC at least, used as money, holds its value over time, and you hear this business suit example a lot. 100 years ago, an ounce of gold bought you a nice business suit. 50 years ago, the same, and today, more or less the same. Inflation hedge, we've seen the charts of what fiat currencies do over time. And global currency debasement. Everybody is racing to debase their currencies globally to make their exports more competitive, because governments love to spend money that they don't have, run budget deficits, either to give to their constituency and help their re-election campaign, or for foreign military adventures, particularly in the United States, where I'm from. As a deflation hedge also, and people don't talk about this a lot, but gold performs well in monetary extremes. So whether it's high inflation or high deflation, like in the 30s following the Great Depression, gold doubled in just a year and a half's time back then. So it can hedge you in both instances. Exploding debt levels, in major developed countries, debt to GDP ratios past 100%. Economists say that once you get past this level, it's sort of a slippery slope. It's hard to crawl your way back out, monetary death spiral, if you will. And there seems to be no slowing. Certainly there's no kind of serious effort to bring those levels under control. And lastly, is a safe haven investment for increasing political tensions. And unfortunately, we haven't evolved as a species enough to reach a level of global peace. What concerns me in particular is that the battles we're picking now, as opposed to the past, the shock and awe campaigns in Central and South America or the Middle East, today we're really poking the Russian bear, as well as with China, nuclear-armed military superpowers. So it's good as a hedge in times like this as well, unfortunately. Fast, easy to store, hide, and transport. And the formatting's a little crazy there. Why do we own silver? A lot of the same reasons as gold, but in addition to that, silver is currently very undervalued. So historically, we'll look at the gold to silver ratio on the next chart and show you why I think silver is likely to outperform gold in the years ahead. The massive paper short positions must be covered at some point. Yes, they can try to settle in fiat, but when silver finally starts moving higher, this tends to throw gasoline on the fire. So I think the spike higher in prices that we're going to see will be significant when it finally happens. And because silver gets used up, right, via industrial demand, new tech, medical, military applications, etc. So here's the gold to silver ratio that I mentioned. It was fixed by law at 15 to 1 at one point. In the Earth's crust, it's roughly 17.5 to 1. Over the last, during the 20th century, it's been 47, and over the last 10 to 20 years, it's been around 55. Currently, it's around 74 or 75. All right, so anytime you see this line come up here, silver is undervalued relative to gold. And the levels are pretty extreme. Here was not long after the dot-com bubble burst. Here's a financial crisis. And here's where we were in 2016, and still at a pretty high level right here. Another thing I like to hold in the portfolio, and obviously we recommend mining stocks a lot. The simple reason why is because of leverage. If they didn't offer leverage, I wouldn't be investing in mining stocks. But if you want to juice your returns a bit, they remain very undervalued. I like to use this chart. This is the HUI to gold ratio, right? And here's sort of a average over since 2000, around 0.30. So anytime this line is down here, below this, mining stocks are undervalued relative to gold. And anytime it's above, gold is undervalued relative to mining stocks. I worked with Mike Maloney for a while, and being a precious metals dealer, you know, I mentioned the leverage and he said there wasn't leverage, so I had to go back and look at this a bit. And what I found is it depends on the time frame, of course. But you want to own mining stocks when this ratio is low and climbing, okay? That's when you tend to see the most leverage, 3 to 4x the move in gold or silver typically. Right now we're at 15. Dipped down low to 0.10 at one point, but you can still see it's half of this average. And what that tells me is that going forward, there can be an expectation that mining stocks will continue to offer significant leverage. Now, I don't advocate holding too much of your overall wealth in mining stocks. What I like to do is occasionally take some of those profits off the table and put it back into bullion, so you limit your third counterparty risk. Blowout results, one other point here at the bottom. This is a nice side effect of the slump that we've had in gold and silver prices, is that miners have been forced to sort of tighten their belts. They had to become lean and more efficient, reduce their costs in order to survive these low price environments. Now that gold and silver are moving higher once again, we're going to see excellent profit margins, and we've already seen this over the past 2 quarters with Core and First Majestic last quarter. And most recently, over the past week, we've seen blowout quarterly results from Fortuna and Silvercorp. Another reason we want to own precious metals is this everything bubble idea. Mike Maloney talks about this as well. This is price to earnings ratio. Of course, it's the price of a stock relative to their earnings. Historically, 15 is fair valued, anything under 10, and we think of stocks as undervalued, and everything over 20, they're in bubble territory. Okay, right here's the Great Depression. Just prior to it, got up to 30-something, dipped back. Here's the dot-com bubble, right? Really ridiculous levels here on a PE ratio. What's really interesting to me, though, this red circle here is just prior to the financial crisis of 2008, 2009, right? When stocks were very overvalued, real estate as well, and everything sort of popped at one time, and we had a huge crash. And here's where we are currently, at around 30. Remember, anything over 20 is technically bubble territory. We're at 30, a higher point than just prior to the financial crisis of 2008, 2009. For perspective, that's how overvalued stocks are currently. Another nice indicator is looking at margin debt, either in absolute terms or as a percentage of the economy. We can see right here is the tech bubble levels of margin debt. Here's a financial crisis at its height just before the crisis. And here's where we are now, all-time highs. And what does this tell us? There's complacency in the market, right? Traders are extremely bullish, and they're not pricing any risk into the stock market whatsoever. And it's precisely at these times, if you study history, that the big crashes occur, when nobody's expecting it. So, the mother of all margin calls is another thing. This means that if we do get a crash, it's going to be exacerbated by the fact that there's so much margin debt everybody's going to have to cover. Get stopped out of their positions, and the slide hastens. Real estate, another bubble, another reason we want to look towards precious metals, one of the only undervalued assets I believe right now that you can be investing in. The blue line here is in the US, right before the real estate bubble popped. And we've come back nationally, not quite to the same levels, but in some markets, Colorado, California, Washington, Oregon, prices are back above where they were at their peak, which should be concerning for anyone that holds significant real estate investments. In Canada, you had this spike, it came down just a little bit, and it's continued to go straight back up at the highest levels ever. This chart is showing home prices compared to the average income of a household, all right? So how affordable homes are compared to how much people are making. And why that's important is if something happens to the economy, to the job market, to wages, all of a sudden there's no margin, there's no safety margin in people's ability to pay their mortgages. So what you do is have a wave of defaults, and of course this crashes the prices. I'd be very careful having a lot of my assets in housing right now. So we're seeing bubbles in so many different markets, except for precious metals, and I'll also argue cryptocurrencies. So why own Bitcoin? First of all, blockchain technology potential. If you're not up on what this is, it really is a revolution. It was a problem that computer coders had for the longest time, this immutability of ledgers. And so what the blockchain can do is make almost any business more efficient via cutting out the middleman and proving transactions, reducing or eliminating fraud. You could think of Airbnb, Uber, the music industry. So many different industries can be disrupted and almost made obsolete by blockchain technology doing it better, faster, and at a lower cost. Bitcoin holds utility. Some people say, hey, it's not gold, I can't hold it in my hand. So why does it have value? Well, it allows you to transfer wealth around the globe in an instant and nearly for free. Compare that to the legacy banking system, how many days it would take and how many fees you would pay, how many intermediary banks would have to be involved. So it's doing something that you couldn't do before with money. Limited supply, a similar characteristic to precious metals, but probably even more so because the supply is capped at 20 million. It's hard-coded into Bitcoin's code. And right now, 16 million of those have been released. So only another 5 million will ever be created through 2140 at a predictable rate that's disinflationary. So less and less each year are created. What happens when you have a market with limited supply and increasing demand? Okay, it helps to explain why the Bitcoin price has gone up as drastically as it has. And compared to gold, yes, gold's limited supply, but we could have huge discoveries and the supply could go up. Some people believe in the Grand Canyon there's huge secret gold deposits. Or if we start mining on other planets, that we're going to find significant amounts of gold. So in some way, Bitcoin's supply is even more capped than something like precious metals. Buying and selling goods, transacting at lower costs and using Visa, MasterCard, or the banking system. So another utility that Bitcoin provides. And if you like precious metals, you probably like the aspect of no central bank, monopoly, or government control. No CRIMEX manipulation, at least up until this point. People aren't leveraging at 100-to-1 paper contracts to move the price around like we've seen in the precious metals market. And that's no longer conspiracy theory, right? The banks were caught red-handed in doing this, so we know what happens. And it's relatively private or anonymous. With Bitcoin, you have to use a tumbling service. With a little bit of effort, you can make Bitcoin transactions anonymous. Some of the other altcoins like Dash or Pivx have built-in a complete anonymous. You can be completely anonymous using those coins. And price appreciation, probably the number one reason for most investors to be in these markets. Here's a chart of Bitcoin over the past year. I think we're about 500 there, and it went up to 2,600. It's since pulled back to around 2,200, but still, we're talking about a 5x return over the past year, and it doubled over the past month before this recent correction since I put this slide together. The Ethereum price, I've recommended Ethereum over Bitcoin to our subscribers. We've been covering Bitcoin in my newsletter since it was around $100. I was an early adopter of this technology. But Ethereum introduces smart contracts into the blockchain. So if-then set of commands, if this happens, release money to this person at this address and this amount. So the smart contract technology really opens the doors for what blockchain can do. Ethereum, 20x over the past year, and I've held it for this entire ride, 4x over the past month alone. So these are the type of once-in-a-generation investment returns that if you're in this market and time it correctly, you might be able to see. If you're considering getting involved and you haven't yet, the pullback that we've seen over the past week, I think represents an excellent opportunity to get involved and to buy. Do so in tranches over time. Don't go all in right now, okay? Bitcoin I view as the anti-dollar, right? Here's what happens. You've all seen this chart to fiat money that's centralized with unlimited supply over time. And here's what happens with a decentralized, limited supply currency. And this is actually pretty realistic. What one Bitcoin would buy you in 2012, in 2013, and 2014. And if it continues on the current trajectory, you can start picking out your Lambo soon. So in summary, we want to hold gold, silver, and Bitcoin together as complementary assets that serve different purposes. Gold to anchor your portfolio, retain value in a shit hit the fan scenario, hide and transport easily, protect against inflation, and as a safe haven asset. Silver, because it's undervalued relative to gold, works better as a transaction currency and because of the industrial demand. And Bitcoin to be part of this monetary revolution, to have your money outside control of the banks and the governments, the returns that we're talking about, all right, and the lower transaction costs that it enables. So if you want to check out my newsletter, our portfolio was up 69% last year. It's up around 82% year to date this year, largely because of cryptocurrencies. It's usually $395. I'm taking $100 off for conference attendees if you use this code. There's some business cards on this table. It has it on the back as well if you want to grab it. I cover precious metals, cryptocurrencies, the cannabis market, energy, and agriculture as well. So my top gold stock pick, if you weren't at the panel this morning, is Alexandria Minerals, AZK or ALXDF in the OTC market. And the question I've posed here is it the next Integra Gold? Integra was my top gold stock pick over the last couple years. Of course, they are getting acquired by Eldorado at a 52% premium, which I'm very happy about. So I started looking into the Val-d'Or region a little bit more. 70 million ounces produced there over the last century. 25 million ounces of gold discovered over the last 15 years alone. Right? It bubbled up through the ocean's floor into these volcanic high-grade veins. So it's a very rich region to be looking for gold. Alexandria has property just across the border from Integra, and they're hitting high grades. They've quadrupled their resource in the past 7 years. Agnico has a stake, IM Gold, Teck, and Sprott recently increased his stake in the company. So vote of confidence by some industry insiders. I think the last word on Alexandria is they're currently valued at around $15 per ounce of gold they have in the ground. Integra was taken out at around $160 per ounce of gold. And they have similar gold structures. Alexandria's grades are a little lower, and they haven't proven up the resources from inferred to indicated yet. But they're in the middle of a drill program, and I believe that they will. So a very undervalued stock, worth checking into. And I think quickly maybe I can field a question or two if anyone has one. That would require the majority of the miners and stakeholders approving of that happening. And if you hold Bitcoin and don't want the supply to go up because you want your value to be maintained, you're probably not going to vote for that. So I view it as highly unlikely that the quantity of Bitcoin will go up beyond 21 million in the future.
What effect do you see on the price of Bitcoin when you see the big banks, Hong Kong, Shanghai Bank, associated with 8 banks doing their own blockchain, and they're not associated with Bitcoin, so the banks are getting into the business? What effect will that have on Bitcoin?
Well, the banks are mostly using the altcoin called Ripple, and they pretty much own that. It's inflationary. There's billions of supply of them, so they're using it for transaction purposes to kind of reduce the time of moving money around. I don't think it'll have any impact on what Bitcoin's doing. Purists in the cryptocurrency markets don't care about Ripple, don't invest in Ripple. The banks will have their own version and it'll suit them, but I think the prices of Bitcoin, Ethereum, and some of the other altcoins that we hold will continue to appreciate.
Yes, I have a question about regulation. There was a speaker earlier today who claimed that, these Bitcoin transactions are all anonymous and government can't tax it. But what if, with all the Apple Pay type applications, all these electronic, paying for a cup of coffee, there's a record for that. And when there's a record for it and it can't be tied to a specific bank source, then who's to prevent the government from coming in, oh, well, we just better put a tax on that because we don't know where you got that money. They often assume that, you know what I'm talking about.
So the government will try, but Bitcoin is a peer-to-peer technology, right? It's decentralized. They can't go raid a headquarters somewhere, shut down a server somewhere. It's much like the recording industry tried to go after torrents, right? You can still go online and download any movie or music you want using torrent, despite millions and millions of dollars of effort and lobbying the government to try to get this to stop. So when it's decentralized, essentially there's nothing that they can do about it. Right. Again, I think they're going to try. I just don't think they're going to succeed to be able to control it or shut it down. That's just my view.
What's your estimate on the amount of Bitcoin that would have been lost as an early adoption?
I'm sorry, can you speak a little louder?
What do you calculate the lost Bitcoins? I heard a story of a guy that had 10,000 Bitcoins on his phone on a beach. Wave came in, wiped it out. This is before the hard wallets. Gone. They're vanished. What do you calculate as the amount that's been lost so far, precisely?
Yeah, I think it's probably anywhere from 5 to 10%, and this is good for Bitcoin holders, right? Because this reduces the supply further. So the actual active Bitcoins available to be bought and sold will never reach 21 million. They'll probably cap out at 18, 19, 20 million, whatever the number happens to be. One other quick word. Altcoins are amazing. Beyond Bitcoin and Ethereum, there's some really cool altcoins out there doing real estate transactions on the blockchain. Factum is a name. Global supercomputer that pulls the resource of their users. That's called Golem. And watch these ICOs, right? They're like IPOs, but it's a revolutionary new way of funding. Initial coin offerings. So they get funding directly from people that hold Bitcoin and Ethereum sending them money. And you can invest early stage before they hit the exchanges. In my experience with the ICOs that I've done, they've hit the exchange at 2 to 3 times the price that I paid at the ICO. Of course, do your due diligence, read the white paper, who's involved, what's their business model, etc. I do all that in the newsletter if you want to get my take on it. And I think my time's up. Thank you very much.